One stock just fell from $194 to $41. And while most investors ran for the exit, Wall Street quietly bet $17 million that it's not over. I'm Alex Carter. Welcome back to Wealth Signal. Quick note before we dive in. Everything in this video is for education only, not financial advice. Always do your own research before making any investment decisions. Okay, let's get into it. Right now, 3 stocks that most investors have completely written off are quietly pulling in massive institutional money in the options market. Bets worth tens of millions of dollars combined. If you want to see how the smart money actually moves before the rest of the market catches on, hit subscribe right now, because this is exactly that kind of setup. Today we're breaking down all 3. A nuclear fuel company that just went public and is already getting hammered, a small modular reactor stock that's collapsed more than 75% from its peak, and a quantum computing name almost everyone left for dead months ago. Stay with me, because the last stock carries the single most lopsided bet of the 3, and it might surprise you. First up, X Energy, ticker XE. You've probably never heard of it. It only went public in April, and it's already down badly. But that crash is exactly what caught one institutional trader's eye. This isn't just another speculative IPO circling the drain. X Energy is building small modular reactor fuel technology, backed by Amazon, sitting directly inside the AI-driven scramble for new power sources. That backing is a big part of why someone decided this dip was worth a serious bet. On just its 3rd day of trading, X Energy hit $37 a share. Today, it trades around $13. A few weeks ago, an institution bought roughly 2,500 call options expiring October 16, 2026, at the $35 strike, paying about $1.70 per contract. Close to a $400,000 bet that this stock claws back a meaningful chunk of what it's lost before the year is out. Here's the twist. That same option has already fallen from $1.70 to around 25 cents. The institution is underwater right now too. But professional options traders don't flinch over a few weeks of price action. They're underwriting a 3-month thesis, not a daily swing. Think about this. $25 to control 100 shares versus $1,300 to actually own them. That's the entire appeal of this trade. The stock is deeply oversold, RSI under 30, and it moves about $1.70 a day on average. String together just a few strong days in a row, and an option like this can triple. That's not hope. That's just leverage doing what leverage does. That's the riskiest name on today's list. What's coming next is a stock most of you already know, and it's fallen even harder. Stock number 2, Oklo, ticker OKLO. If you've followed the small modular reactor and AI data center story at all, this name needs no introduction. It's had one of the wildest rides of the year. Oklo isn't just another beaten-down reactor stock. It's one of the names most tightly linked to the idea that AI data centers will need brand new, dedicated power sources to keep running. And that exact story is what sent it soaring earlier this year, right before gravity took over. Oklo traded as high as $194 a share. Today, it sits around $41, a collapse that's erased almost all of that run-up. And yet, just days ago, an institution bought roughly 50,000 call options expiring December 18, 2026 at the $90 strike, paying about $3.40 per contract. That's close to $17 million committed. Control over about 5 million shares of stock through the options market alone. Here's the twist. $90 is more than double where Oklo trades today. This isn't a bet on a small bounce. It's a bet on a massive move. And that same option has already dropped to around $2.30, which means anyone stepping in today pays less than the institution originally did for the exact same bet. Here's the thing. Nobody needs Oklo at $90 tomorrow. There are 155 days for this to play out. Oklo is deeply oversold too. RSI under 30, moving about $4 a day on average. Just 2 or 3 strong days somewhere between now and December, and this position could move sharply higher. 2 down, 1 to go. And the last stock on this list carries the biggest percentage swing of them all, in a sector plenty of people already left for dead this year. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description, go grab it. And drop a comment telling me which of these 3 you'd want to watch closest. Stock number 3, IonQ, ticker IonQ, quantum computing. If you remember last year's quantum computing hype, you remember exactly how it ended. Everyone piled in, then everyone got burned. IonQ isn't just another hype stock crawling back to earth. It's one of the more established names in a field that's still years from mainstream adoption, which is exactly why serious institutional money treating this as a longer-term options bet is worth paying attention to. IonQ hit roughly $84 last November at the peak of quantum computing mania. Today, it trades around $35, with a recent low near $26. A couple of days ago, one trader bought January calls. Then, more recently, another trader placed a roughly $1.5 million bet on November $60 calls, a strike more than 70% above where the stock sits right now. Here's the twist. Nobody knows if this is a speculative bet or a hedge against a much bigger position elsewhere. Institutions get it wrong plenty of times, and a $60 strike is a genuinely aggressive target on a $35 stock. But historically, when size like this shows up in the options market, it's right more often than it's wrong. Picture riding this stock through its wildest swings. RSI sits at 26 right now, deeply oversold, and IonQ moves about $4 a day on a $35 share price. That's a massive percentage swing relative to its price. It only takes a couple of strong sessions for a name like this to snap hard in either direction. IonQ isn't the only quantum name on this trader's radar either. Rigetti and D-Wave both came up as names that could see similar institutional interest if the sector heats back up. So, out of the 3 stocks we've covered today, how do they actually stack up against each other? Let's rank these 3 by the size of the institutional conviction behind them. Third place, X Energy, with roughly $400,000 committed to that October bet. Real money, but the smallest of the 3. Second place, IonQ, where a $1.5 million bet is asking for one of the most lopsided moves on this list, a stock that needs to climb more than 70% just to reach its strike. That's the most lopsided bet I promised you at the very start. And first place, by a wide margin, Oklo. That $17 million options position is, dollar for dollar, the single biggest bet on this list, riding on a stock that's already collapsed from $194 to $41. None of this means these stocks are guaranteed to bounce back. Institutions get it wrong plenty of times too. What this really shows is how professional money actually operates. Not chasing headlines, but positioning quietly, with real capital, months before anyone else is paying attention. That's the entire philosophy behind watching options flow in the first place. If breakdowns like this, where we follow the smart money instead of the headlines, are useful to you, hit that subscribe button and let me know in the comments which of these 3 you're watching closest. And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. I'm Alex Carter, and I'll see you in the next one.